Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of those super dense SEC filings, and you won't believe what I've dug up this time a semi. Annual report that's packed with details on Voya equity trust funds, but don't worry, we're going to decode the most interesting parts. So you don't have to in this video, we're diving deep into the financial performance and investment strategies of several Voya mutual funds, looking at their reports for the 6-month ending in November 2025. Well, focus on what really matters, the numbers that tell the story of their health and where they're putting your money before we jump in. If you like getting straight to the point insights from official corporate documents, hit that subscribe button and ring the bell so you're always in the know. Also join our Discord community linked in the description for even more exclusive content and discussions. We're starting with the big picture, the overall status of Voya Equity Trust. This filing provides a look at multiple Voya funds, and it's like peering into several different investment portfolios all under one roof. The reporting period is from the 1st of June 2025 to the 30th of November 2025, quite a substantial chunk of time to analyze. Let's focus on one of the star funds, Voya Corporate Leaders 100 Fund, specifically class of shares with the ticker VICAX. Looking at the cost for a hypothetical $10,000 investment in class of shares, it cost $43 for those 6 months. That translates to an annualized cost of 0.81% of your investment. This is essentially the price you pay for the fund management and other operational expenses. This fund is a giant with over $1.2 billion in total net assets. That's a huge amount of money from investors. They hold 101 different investments in their portfolio, and their portfolio turnover rate is 12%. This means they bought and sold about 12% of their holdings during this period, which suggests a pretty stable investment approach. Now for the juicy part, what are they actually investing in the top 10 holdings? Give us a clear picture. Their biggest investments are in some very well-known companies like Eli Lilly Sudiyamp, company making up 1.4% of the fund. Then comes Merkiamp, company incorporated at 1.3%, and Alphabet Incorporated Class C also at 1.3%. Intuitive Surgical Incorporated is another big one at 1.3%. They are also invested in Thermo Fisher Scientific Incorporated at 1.2%, Amgen Incorporated at 1.2%, Broadcom Incorporated at 1.2%, Caterpillar Incorporated at 1.2%, Caterpillar Incorporated at 1.2%, Danaher Corporation at 1.2%, and General Motors Company at 1.2%. These are all major players in their respective industries. When we look at the portfolio composition, it's heavily weighted towards common stock at 98.4%, with only a small portion in short-term investments and assets in excess of other liabilities. This fund is definitely focused on the stock market. The sector allocation tells us where the money is spread out. Financials make up the largest chunk at 17.2%, followed closely by healthcare at 16.9% and information technology at 16.2%. Industrials come in at 13.9%, consumer staples at 9.7%, and consumer discretionary at 8.7%. Communication services are at 7.3%. And then we see utilities at 3.0%, energy at 2.8%, real estate at 1.9%, and materials at 0.8%. This spread shows a balanced approach across different parts of the economy. Now, let's check out the Voya Global Income Funiamp. Growth fund class are shares under the ticker VJAGS. For a $10,000 investment here, the costs over the last 6 months were $58, which is an annualized 1.1%. This is a bit higher than the Corporate Leaders Fund we just looked at, potentially reflecting the global nature or growth strategy of this fund. This fund has total net assets of about $442 million. It holds a much larger number of assets, 300 to be exact, and has a portfolio turnover rate of 69%. This higher turnover suggests a more active management style, perhaps looking for more growth opportunities. The top holdings here reveal a focus on technology giants. Nvidia Corporation is their top holding at 1.9%, Apple Incorporated is next at 1.8%, and Alphabet Incorporated Class A is also at 1.8%, Microsoft Corporation follows at 1.6%, and Amazon.com Incorporated at 1.5%. These companies are driving a lot of the current market trends. Interestingly, their top 10 also includes some debt instruments like Millicom International Cellular SAR with a 7.375% coupon due in 2032 at 0.9%, Welltower Op LLC. A real estate investment trust with a 3.125% coupon due in 2029 is at 0.8%. Broadcom Incorporated is back again at 0.8%. And then we see Coinbase Global Incorporated with a 0.50% coupon due in 2026 at 0.7%, and Iberdrola Finanzas SAR listed with a 0.800% coupon due in 2027 at 0.6%. This mix of stocks and debt shows a strategy aiming for both growth and income. The investment type allocation shows common stock at 33.2%, but a very significant portion in corporate bonds and notes and convertible bonds. And notes these are at 29.6% and 29.7% respectively. This is unusual and highlights the fund's income generation focus along with assets in excess of other liabilities representing 4.5%. Next up is the Voya Large Cap Value Fund class, a shares with ticker IEDAX. For class of shares, the costs on a $10,000 investment were $56 for 6 months, which annualizes to 1.07% here. 2, we see a focus on a balanced approach. This fund is substantial with over $816 million in net assets. It holds 73 portfolio positions and has a portfolio turnover rate of 63%. This indicates a more active approach than Voya corporate leaders, but less active than the Global Income FOI AMP Growth Fund. The top holdings are different here. Alphabet Incorporated class leads at 4.7% Chevron Corporation, follows at 4.2% Bank of America Corporation, at 3.7% Duke Energy Corporation, at 2.9% Amazon.com, Incorporated at 2.5% Wells Fargo CAMP, Company at 2.4% Welltower Incorporated at 2.4% and 3. M Company at 2.3% at 2IMT. Incorporated and Cisco Systems Incorporated round out the top 10, both at 2.1%. This list shows a blend of growth and value stocks. In terms of portfolio composition, it is almost entirely common stock. At 99% common stock is king here with very little in short. Term investments or assets in excess of liabilities. The sector allocation for this fund is quite different. 2 financials are the largest sector at 19.7%, followed by healthcare at 14.3%, industrials at 10.7%, communication services at 10.7%, and information technology at 10.4%. Then we see consumer staples at 7.3%, energy at 6.6%, consumer discretionary at 6.3%, and utilities at 6.3%. Real estate is at 4.1% and materials at 2.6%. The heavy focus on financials and healthcare with a blend of other sectors suggests a value-oriented strategy looking for stable, diverse holdings. Now let's glance at the Voya My Dynamics Small Cap Fund class, a shares with ticker VI6. For a $10,000 investment in class, a shares the costs were $64 for 6 months, annualizing to 1.18%. This is a smaller fund compared to the others we've seen with around $167 million in net assets. It holds a large number of positions, 185, and has a fairly high portfolio turnover rate of 59%. This suggests active management in the small cap space, where opportunities can change quickly. The top holdings are different here, indicating a focus on smaller companies. Flowserve Corporation is their top holding at 2.5%. Muller Water Products Incorporated Class A is next at 1.9%, and we see Alignment Healthcare Incorporated at 1.4%. Credo Technology Group Holding Limited is also at 1.4%. Guardant Health Incorporated and Health Equity Incorporated are both at 1.3%. Applied Industrial Technologies Incorporated, TriPoint Homes Incorporated, and Hancock Whitney Corporation are all at 1.2%. Rambus Incorporated rounds out the top 10 at 1.2%. For portfolio composition, common stock makes up a massive 99.2%, but there are liabilities in excess of other assets at negative 3.0%. This is something to watch, potentially indicates short-term funding needs or unusual liabilities. The sector allocation shows financials at 19.3%, information technology at 17.5%, healthcare at 17.0%, and industrials at 16.5%. These top 4 sectors really dominate the fund's focus. Let's quickly check out the Voya VAX Series MCV fund with ticker VVJEX. This fund has very low cost for a $10,000 investment. It was only $8 for 6 months or 0.16% annualized, a very attractive number. This fund has net assets of about $113 million. It holds a large number of investments, 346, and has a portfolio turnover rate of 61%. The low costs and moderate turnover suggest an efficient fund. Top holdings include Alliant Energy Corporation at 2.0%, Packaging Corporation of America at 1.6%, LabCorp Holdings Incorporated at 1.6%, and Expedia Group Incorporated at 1.5%. Hartford Financial Services Group Incorporated is also at 1.5%, CMS Energy Corporation and Performance Food Group Company are at 1.5%, Keysight Technologies Incorporated and Lincoln Electric Holdings Incorporated are both at 1.4%, and Hologic Incorporated closes the top 10 at 1.4%. Portfolio composition shows common stock at 96.2%, but also liabilities in excess of other assets at negative 0.2%. This is something to keep an eye on. The fund structure and strategy seem to be aiming for broad diversification with a mix of sectors: financials at 14.8%, industrials at 18.3%, and consumer discretionary at 10.9% are the largest holdings. Now let's look at the advisory and sub-advisory contract approval discussion. This part is crucial because it tells us how the leaders of these funds decided to keep working with the investment managers. The board of trustees reviewed every carefully, looking at how well the funds performed over different periods, how much the fees were compared to similar funds, and if the managers were doing a good job picking investments. They talked a lot about the managers setup. This means Voya Investments, the main manager, picks other companies called sub-advisors to actually manage the money for each fund. The board checked if Voya Investments was doing a good job picking and watching these sub-advisors. They looked closely at how each fund performed compared to its benchmarks in other similar funds. For example, Voya Large Cap Growth Fund had mixed but improving performance. Voya Large Cap Value Fund showed strong performance, outperforming its benchmark in most periods. Voya Mid Cap Opportunities Fund had mixed results but saw expense limits lowered, which is great for investors. Voya Multi-Manager Mid-Cap Value Fund showed modest performance, but with very competitive expense ratios. And finally, Voya Small Cap Growth Fund showed strong long-term performance, outperforming its benchmark. In most periods, it is clear the board is focused on getting good results for investors, while keeping a close eye on costs. When it comes to fees, they compared the net expense ratios of their funds to those of similar funds out there. For some of these funds, the management fee rates and net expense ratios were ranked in the first quintile, meaning they are among the lowest in their category. This is a big win for investors, as less money spent on fees means more money kept as returns. Now for the financials, let's take a peek at the statements of assets and liabilities for some of these funds. Voya Large Cap Growth Fund has total assets of over $850 million. This is a strong number indicating substantial investor confidence and capital managed. Their total liabilities are quite low at just over $920,000. This means the fund has very little debt compared to its assets, a very healthy sign. The net assets for the Large Cap Value Fund are over $816 million. Their paid-in capital is over $619 million, showing a sound capital base. Similarly, the Voya Mid-Cap Opportunities Fund has total assets just under $700 million and liabilities under $900,000. This low liability is excellent, showing the fund is not over-leveraged. For the Mid-Cap Opportunities Fund, the total distributable earnings are over $168 million, which shows positive retained earnings, which is good for future growth potential. Finally, let's wrap this up with our take on Voya Equity Trust's performance based on these reports. Overall, these funds from Voya Equity Trust presented a mixed but generally solid financial picture in late 2025. The Voya Corporate Leaders Fund stands out with its massive asset base and exceptionally low turnover, suggesting a steady investment approach. The Global Income FIDE-AMP Growth Fund offers a more complex strategy with a blend of stocks and debt instruments, aiming for both growth and income with a higher turnover rate, indicating more active management. The Large Cap Value Fund demonstrates strong performance and competitive expense ratios, appealing to investors looking for established companies. The My Dynamic Small Cap Fund shows a more aggressive approach with a higher turnover rate and a focus on smaller growing companies, which comes with higher costs but potentially higher rewards. The Voyavax Series MCV Fund impresses with its very low costs and robust sector diversification. However, we did see liabilities in excess of other assets in some of the smaller funds like the MI Dynamic Small Cap Fund, which is something to monitor as it could indicate short-term pressures. The extensive discussion on advisory contracts shows a diligent board ensuring fair compensation and performance oversight, which is crucial for investor confidence. The biggest risks for any of these equity funds remain market volatility, geopolitical events, and potential economic downturns, as highlighted in the notes, which can impact global economies and thus fund values. What this filing tells us is that Voya is managing a diverse portfolio of funds with varying strategies and risk profiles. Overall, the financials seem generally healthy, with a clear focus on investor returns and cost management, though a few funds warrant closer observation due to slight discrepancies or higher costs. What do you think about these Voya funds and their performance? What are your thoughts on this filing? Let us know in the comments below. If you found this breakdown helpful, give this video a thumbs up and subscribe for more dives into corporate finance and investing. And don't forget to join our Discord community linked in the description to keep the conversation going. Thanks for watching, and well, see you in the next video.